This interview is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome to Cambridge House Live. I'm Vanessa Collette at the Toronto Resource Investment Conference. I'm joined by Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. Welcome, Frank. Great to have you here with us today.
It's good to be here.
Frank, let's start out by talking about the U.S. recovery. How confident are you about a recovery happening?
There's a recovery taking place, but it's very gradual. And when you take a look at housing, this big boom that's supposed to be taking place, when you start to drill down, you notice that 50% of all the homes are paid with cash. The regulatory environment, the fearfulness, it makes it so difficult with bureaucracy to actually get a mortgage. So we see all this money being printed, but it's not really showing up in money supply growth. So that's a key factor. When you start seeing double-digit money supply growth, that's because of a lot of lending.
Interesting. And so looking at some indicators out there, you know, the S&P has had its best run in history over the past 4 years. Do you think it's sustainable?
For several reasons, yes. It's due for a big correction, but I do think it's sustainable because capital formation, the model changes. And regulations change factors of where money's going to flow to. They've put a lot of money into the system that's showing up in the stock market in real assets, because what you earn on a treasury bill right now in America is 2 basis points. Inflation's 1.7, so you're losing money. So money is going and looking for dividend paying stocks. And even now with rates rising in America, there's something like 60% of the S&P give you dividend yields higher than a 5-year government note. So the government note is in fact losing money. So I think that you're going to see this money continuously shift. The other key factor in the formation of capital model has been stock options. You're seeing less and less stock options being granted to management, but they get granted stock over 5 years, vesting. So what's the best interest when you've been given a lot of stock? You get all the dividends today. So you don't have to get a big salary increase because you live off the dividends. So then what does a management do? They buy back their stock. There's been record stock buybacks and increase the dividend. So that's how the formation of capital model has shifted.
So you think the rally is here to stay?
I think on valuations, when you look at a historical basis, it's not extremely overvalued. It's not extremely undervalued. But I come back to the fact that companies like IBM, their revenue hasn't changed in 10 years, but they bought back 50% of their company. So therefore it looks like their revenue is growing on a per share basis and buying back their stock. You're seeing more and more companies do that.
So it's more a pattern that you're seeing happening with these companies.
And when with interest rates so low, then pension funds, et cetera, are saying we have to go buy dividend paying stocks. In fact, you've seen Switzerland, their Federal Reserve equivalent, has been buying Swiss companies because the dividend yields are higher than they are what they're issuing on bonds for. So they can buy Nestle's and their chemical companies, et cetera, growth plus dividends.
Now, people are worried about a slowdown in emerging markets, and specifically in China and India. You say that a strong U.S. is good for China. Is that enough?
Well, I just don't think it's that factor. One always has to take into consideration currency moves. Okay. Because currency moves can make you non-competitive or competitive in the manufacturing sector. So now we're seeing that Indonesia, Thailand, these currencies have been falling against the dollar, so all of a sudden they're going to become much more competitive in exporting. So I think it takes about 6 months before you get that lead to lag.
Interesting. So do you think that a slowdown is going to continue and get worse, or is this just a temporary situation?
I think it's temporary. I think that when push comes to shove, you're going to have, if the Federal Reserve, if Summers comes in, he's a big believer that why not just give everyone $300 each and let them go spend? And that will just drive consumption again. So they turn around and put money into the banking system, or they turn around and give a tax break. Anytime they give a tax break in America, it generates substantial spending, and you see it showing up in food, gas, etc.
Now, you've mentioned that the demand coming from China is not the only factor in the high commodity prices that we're seeing. Why is that?
Well, one of the big correction took place is because the great super cycle that we witnessed in 2005, 6, and 7 was because Europe was strong, America was strong, and China was powerfully strong and growing. So you had these massive economic blocks growing, and that basically demonstrated where all the commodities rose. Since then, Europe is trying to recover, and they're modestly and slowly recovering. And what's important to China is that China actually has more trade with Europe than they do with America. So as Europe starts to pick up on their economic activity, now we're seeing this show up in China. Manufacturing numbers are showing up. We're seeing that Baltic shipping rates are now picking up around the world. So I think it's important to witness the triangle, I like to call it.
So they're diversifying away from the US consumer.
Oh yes, they've been doing that for the past 5 years. The real hurt to China has not been so much America slowing down, it's been Europe.
And how does this all tie into the US dollar?
Well, it's a euro, it's a dollar, it's the yen, and then you have the renminbi, but I think the real key factor is watching these other countries' currencies and how they play out. And what you see in America is they've been exporting high precision equipment, medical diagnostic equipment, and importing trinkets, you could say, other type of sort of lower end consumer products. The same thing happens in Germany. They're exporting Audis, they're exporting high precision equipment, and they're importing clothes. So I think it's important to recognize where in the food chain, what does Europe buy, what does America buy, and then what do they sell?
Interesting. Well, if all this is true, what does this mean for commodity markets?
Well, it's going to rotate around. It's not going to just be this huge secular bull market like we had I think for the next cycle. It's going to take another 4 years before you start to see that. And it's going to be sort of walking but wounded economies. But what will happen is you're seeing that the cuts in exploration, the cuts in green fields going to brown fields, and the development of new projects, they're going to slow down. And I think that that's what's important for investors to recognize, that they slow down, that therefore the supply of the commodity is going to slow down. However, the demand is not slowing down in a massive way like '08.
So if the supply slows down, then you're quite bullish on some of these commodities,
On these
could
commodities,
we say?
yes.
So specifically gold, silver?
Well, I think the commodity metals, for sure, and I also think you'll see a lot of the soft commodities, food, for argument's sake. It's easy to identify the importance of food.
Do you invest in agriculture and food as well?
All commodities, soft and hard. And we also have Eastern European fund, we have emerging market funds, so it does take us on a China region fund, so it takes us all over the world.
We were discussing just before we started shooting, I'm a China file as well. Let's talk about China. China is undeniably a key driver of the global economy. What's happening there right now?
Well, it's coming off its sort of, I would call it trough, and I think the new leadership is very caught up with power. He looks at these, and you don't hear this coming from Obama, that he's looking at railroad activity and energy consumption. So he's very caught up on what has the biggest catalyst for creating jobs. And I think that that is what's sensitive when you take a look at this new leadership. Also, his wife, she's a singer, she's a star, and now you have the new Camelot. It's really a big change, but I think what's going to be profound, each leader that's come in China wants to leave something that's very significant as their footprint or their fingerprint on the dynasty. And I believe that people don't realize that today, China has a 2-tier social security system. So if you're from the rural area, it's a different number than from an urban area. Therefore, if you have your family and you have an urban social security number, you cannot get any of the social benefits in the country, and vice versa. So there's 20 million migrant workers that are in the cities. They cannot bring their families into the cities, but once this one system takes place, like we have in Canada, like you have in the US, then you're going to see a huge economic boom take place, especially in the housing market.
And so you mentioned that there is this 2-tier system to the society. Where does the middle class fit into all of that?
Well, there's a middle class that's very substantial in the urban area and less in the rural area, and I think that you'll see all of a sudden it'll make it more of a meritocracy for economic prosperity. And remember, the whole 2 pillars of economic growth in China that Deng Xiaoping said was social stability and economic independence. So you see this sort of rebalancing all the time in China on policies to stimulate economic activity, also social stability. Some of the mistakes with social stability have come from Tiananmen Square, which they've learned a big lesson with. But this is this balancing factor that everything takes place in China.
It's interesting, I've heard that the younger generations don't really know what happened there in Tiananmen, that they're being told a very different version of the events.
Oh, I'm sure they are. But what's important to recognize is that they have a social unrest with many more protests taking place over inequalities. In particular, like I mentioned, this like two-tier social security system. So once you remove that, that'll create much more economic activity. And the other thing the Chinese are doing that are very, very significant is an infrastructure railway system. Last year I took my board, we went from Shanghai to Beijing at 300 kilometers an hour, 20 feet above the ground. It was breathtaking and spectacular. So what they want to do is build 25,000 kilometers of railway throughout China, so therefore the lower end of the economic food chain can move all over the country. They can't afford an airplane, they can't afford a car, because they built the highways, but they can't afford that, but they can all afford the train system. So I think that China's really laying out the tracks, no pun intended, for a sustainable economic activity.
Interesting. I just want to move on to your love and fear trade, is that correct?
Yeah, that's right.
We had a question actually from a subscriber saying, you talk a lot about the love trade and the fear trade. Is there a middle ground?
Well, it's really simple, the math, because the fear trade dominates 80% of the media, but really the demand is only 50%. 50% of the gold demand around the world is love, and it's cultural, and it's affinity, not just in China, but India, the Middle East, Turkey, Thailand, Vietnam. Gold is something you give for every type of a ceremony. And I think that that's not going away, and what's important is the correlation of GDP per capita in these countries where love and gold are highly intertwined.
So what do you see happening, just as we wrap up, what do you see happening with gold in the next year?
Well, historically, this is the volatility of gold. Gold can go plus or minus 15% on over any time, or any rolling 12-month period. Whenever it jumps 30% over 12 months, it's time for a correction. Like in September, it was down 30% over 12 months, it's time for a big surge, which we're in the process. We are not overbought and not close to it. So, and we're also in what they call the seasonal pattern, where gold bottoms basically in the summer and rallies the Chinese New Year. And we're now in that sort of that seasonal pattern.
Frank, it was fascinating having you here today. Thank you so much for joining us, and we hope to see you again soon.
Thank you.